Hello, everybody, and welcome back to CryptoLiveLeak. My name is Ken Garofalo, and today we have the pleasure to speak with longtime show faithful, Phil Champagne. How are you doing today, Phil?
Hi, Ken. Nice to see you again, and thanks for having me.
Yeah, absolutely welcome. And today we actually have an extremely exciting topic. As most of our topics are, it is Tezos-centric. But today we are going to discuss how the Tezos hash can be recorded into the Bitcoin blockchain. And all of this is going to be listed on tezosbtc.com. We'll have the link in the bottom of the video. And why don't you go ahead and start us off, Phil, and give us a little bit of description, proof of work and proof of stake, the two differences between Bitcoin and Tezos.
Yeah, so one of the things that the Bitcoin blockchain has been used is as a method to record hash of, say, a document. So let's say you're a writer for a script of a scenario for a movie, and you write the script, you put your name, author, blah, blah, blah. You take a hash of that document, you record it in Bitcoin's blockchain. And then, so that means it'll be easy for you to prove in court. And look at that. This exact script with my name on it has been recorded. The hash has been recorded in Bitcoin's blockchain. So it's a method of proving your copyright rights, the rights to a copyright for a document. And so that's how some people have actually used it. I'm not sure about this specific case, but it's being used for other purpose similar to that. Or at least it's been suggested to be used in this way. Now, the premise of TezosBTC.com is basically to record Tezos hash, the blockchain, into a Bitcoin's blockchain. And just to recap, in the documents for Tezos and during the white paper, not the white paper actually, the flyer for the ICO, they were actually mentioning the point that the Tezos hash could be recorded in some periodic method in newspaper or things like that. So that'll be another form basically to do that. So let's. I want to cover that with the next slide I sent you. Just to cover.
Yeah.
That's
interesting that you say recorded on a newspaper. Just thinking back to some of the first cryptography evidence that I came across, they were recording digital fingerprints and they were publishing the hash on the back of, was it the New York Times? And this company that specifically did it was a telecom company. I think they worked for Bell Telecom, and they actually still to this day publish the hash on the back of the New York Times. So it's just cool to see that people are still using that method to record hashes. So yeah, absolutely.
Yes.
Let's pop right
So
into
the only difference between a newspaper and Bitcoin's blockchain is actually I will be tending to trust more Bitcoin's blockchain than the newspaper, in the sense that if the newspaper is being hijacked or by some banking company or whatever who wants to change something in the past, they could obviously they would have to have all the papers that exist out there, but they could modify their archives on the computer in their system. But it's much more difficult for it's actually impossible for Bitcoin to do the same with the Bitcoin's blockchain. So that's the just the principle behind. So just to cover. So going back on between proof of work and proof of stake, and there's actually with the price of Tezos going up, there's way more people now joining this, the Tezos interest. There are new Tezos investors, so they might not be familiar with all the advantages. So I want to go over the difference between proof of work and proof of stake. So proof of work, it's has when you look at the two together, it has less overhead. The blocks are smaller, and the protocol is simpler when you look at it. It's just it's quite simpler. The security provided is by so the security and integrity of the blockchain is provided by a huge hash power. And the disadvantages for proof of work, well, it's more like gold in the sense that there's no cash flow generation. To be able to mine, you need to have a heavy investment in other resources other than Bitcoin. So that means AC computers, just like a gold mining company needs to buy huge trucks, they have to acquire land or lease land, and they have to acquire very expensive chemical process to extract the gold out of the dirt. And so all of that is not gold. It's investing in other things. So it's really not, and most of it are operating costs that you have to expense out of that. So that's a very big difference. The other point, which is the elephant in the room, is obviously the huge consumption of electricity for proof of work. And so that's the major difference. The proof of stake, on the other side, you have a cash flow income generator, and then the best equivalent that I have is the gold coins that you had in the 1800s, deposited in the banks, and you earn interest through loans. Why I mentioned the gold coins in the 1800s is that today with the inflation rate, which is not 2%, it's really more like 5 to 6%, is in some countries even worse. You're actually looking at a loss of purchasing power here, while in the gold coin era, you had something like 2% inflation in gold, while the inflation and the productivity and the GPU, the gold, the GDP thank you, was actually going up, just more,
GDP?
even more. We're gaining in terms of purchasing power, and you're earning interest. So that's the equivalent in terms of proof of stake. And obviously, the limited consumption of electricity, very low, in fact. And you also have the 51% attack is way less likely. And reason why is that just like we had with the Ethereum Classic, I think it was a few months ago, it was a 51% attack. It's so easy for someone, it doesn't matter if they are actually in a Bitcoin or something like that, they have a huge hash power. They can redirect that without, they don't need to acquire Ethereum Classic or or the other, any kind of altcoin. They can just orient their ASIC powers towards that coin they don't like.
Right.
They actually want it to drop down, so they want to attack it. So then they'll be this, and they'll be making this, and there'll be a pressure, and it will selling because people say, "Oh gosh, look at that! It's not secure." So you've got that aspect of it that you. But in the case of a proof of stake, you need to acquire a lot of it to be able to create some sort of a 51% attack. You'll need to acquire 51% of all Tesla, and if that was possible, and then you'll destroy the value by attacking it. So basically, you're shooting yourself in the foot. So that's the point where I want to bring up. It's less likely on that end.
Exactly. So like proof of stake, right? So everyone has to go, say they wanted to acquire the 51% of Tez, they'd have to go to market and bid up that price to acquire all of the Tez, making a huge capital investment only to, destroy the value. So it makes no sense for them to do that. Proof of work, we saw the example recently where Binance was hacked for 41 million worth of Bitcoin. And I believe there was discussion with CZ trying to get these centralized mining pools to come together and do a rollback on Bitcoin, essentially 51% attack on Bitcoin. And all he needs to do is get a few mining pools that control this majority, 30% each control of the mining power, and then that can be possible.
I didn't know this. That's interesting. Wow. Yeah, I guess that's actually a case, and that's the reason why the importance of knowing the difference between the two architecture and the two technology, basically. So the disadvantage is there's a higher network and data overhead compared to proof of work for proof of stake. The blocks are larger and the overheads in the block. I'm not talking about the transaction themselves. I'm talking about the block overhead to maintain the network, decide who will be the bakers baking which blocks, and who will be participating in verifying it. And these are actually all other aspects that we need to consider. And there's more overhead, and so that's the more disadvantage. But overall, I would say that there's a little bit more. It's more beneficial proof of stake, and in that end, we have to think about what if instead of proof of work, imagine if Bitcoin actually started as a proof of stake coin, how things will be overall perceived in general public right now. Seeing this coin 10 years on, the very first one, and it's proof of stake, the perspective will be a little bit different. And now suddenly, wow, you have this additional aspect of being able to have passive income on top of that. So it's interesting to, when you change your perspective a little bit on how things historically, I would have changed those things. I still believe it's important to have both around, because we don't know what kind of situation we'll be running in the future. So I think it's always like the Darwin approach. You have multiple aspects running together so that you can, see how things will behave in competing against each other, and technology as well.
Right. And then why not leverage the advantages of both by doing what you propose here in this video?
Yeah,
Right.
yeah, and that's the part that's funny is that Tezos can benefit from the proof of work of Bitcoin, while Bitcoin cannot really benefit from that angle. I mean, yeah, they could record the Bitcoin's blockchain into Tezos blockchain, assuming, and then that'll be maybe that'll be discussed one day. But it's we'll see. I mean, it's just, I'm throwing this
Maybe on the next video.
when that happens. Yeah. So the security, so that's a very important aspect, and that's the two angles I want to cover. So in both cases, proof of work, proof of stake, the one main component is that the entire blockchain is stored, the same entire blockchain is stored across thousands of computer nodes. And that applies for both proof of work and proof of stake. And that's really one of the key components of our security. It's like everybody has the same consensus, and it's through consensus. In the case of Bitcoin, it's through the proof of work and the hash power, which also shows up in the blockchain itself. You see all those hash where there's requirements for miners to have a number of certain zeros, and the more proof of work, the more leading zeros there is. In the case of proof of stake, like Tezos, well, then you have those blocks have been signed by computer nodes, those bakers, and they're all the same. Generally, all those 400s or 500s bakers that are basically signing, and you see those repeating signatures coming over and over repeatedly. So that's the additional. Obviously, you might need to know about those bakers, but the point is just by itself having a form of verification of security.
And so, would you say that the bakers and Tezos, their addresses sort of are whitelisted? So, say if one was investigating if these verifications were accurate, then you'd be able to use whitelist check against those addresses, or?
No, that's not exactly what I mean. It's more like the fact that overall, if the majority, if one baker was signing an invalid blocks, he will be penalized heavily. And so basically the rest of the bakers would have to be compromised just as well to participate in signing wrong blocks or that kind of thing. So right up front, you've got the same mechanism as Bitcoin, where miners will not be propagating an invalid blocks. And so it's similar to the
Just
same
a way
aspect.
to keep everyone honest.
So by itself, what I'm talking more about is that what we'll cover it. You'll see a little bit more. So it's like here actually. Let's go with the conditions events I want to cover. So, and if you look at the bell curve and you think about the insurance company that needs to insure, they're always looking at what is the probability of a major bad event to happen, and what are the costs associated with that, and how likely it is, and so on. So they're always looking at those tail and lower probabilities and how likely it is to happen. So the majority of our time, 99.99%, will be in everything is normal condition, where the internet is working for everyone. The great majority of nodes will all have the same blockchain, And so in this case, both proof of work, proof of states are finding these conditions where people are just connecting, downloading the blockchain, and they're all getting the same thing. And so now that's the other end is like you've got war, you've got an event or a EMP attack, or well, obviously the very, very tail end is the which I not mentioned here is the Mad Max scenario, in which case there's actually no electricity for 1 year, 2 years, pick a time, or an EMP attack on the whole planet. And where once you bring things back up, how you figure, okay, well, I don't remember anything about what it used to be. And so now you have to reconstruct. And now, so having a form of integrity in some way to check those things is the more you have, the better. So that's, so in this case, the local disruption is imagine that Dr. Evil of Austin Power was taking possession of your country, a small country somewhere. And he was basically, so you're connecting to hundreds of nodes, but all from Dr. Evil's nodes, or so that he can recreate the blockchain in some way. So there are two aspects to it. Either the same blockchain as it used to be was the same, but then he changed, you rewind back a little bit, and then it continued from somewhere in the middle of the blockchain. In that, you'll have a disruption in both cases. In the proof of work, what you'll see is the hash power will drastically change suddenly. So you'll see a certain amount of leading zeros, and then there'll be 1, 2, or 3, or 4, and likely 4 zeros less on average. The terahash of Bitcoin compared to Bitcoin Cash is 10 times more for Bitcoin, and it translates to 8 bits more of zeros requirement, 8 or 9 or 10 that is required for Bitcoin compared to Bitcoin Cash. Now, Bitcoin Cash is still very high, so Dr. Evil, with his lower power of Hayek computers, will likely have even less than Bitcoin hash. So you'll have probably instead of 10 or 12 zeros for Bitcoin, you'll have 5 or 6, really quite a difference. So you'll suddenly see this blockchain dropping in number of zeros leading. That, or it recreates from the beginning, which will be even more costly and much more obvious that that has been something is wrong, because there'll be even less, because he'll have to shrink this so that he can accelerate. He can't wait 10 minutes every block. He has to wait a minute or two. So, or actually a few seconds. Now, the proof of stake, the signatures of the bakers will be involved, and certainly you'll see at some point all those bakers' signatures that were prevalent all the time in the block. None of them are showing up later on in the blockchain. So you've got a disruption where suddenly, I don't see any of the bakers, Hayek Lab, or any of those. So you say, what the heck is going on? The solution easier for a hacker in this case will be actually to start from the Genesis block of Tezos and recreate, which is still expensive but not impossible compared to Bitcoin. And so in this case, he creates a bunch of fake bakers address, brand new ones. He credit himself a bunch of Tez. He basically creates the equivalent ICO distribution. And so that too, that means that any of the signatures that we're used to see will not exist in this alternative. So that means that you remember somewhat a little bit, like some of those signatures. But again, it's one of those weird cases we're talking about. But it's just a point I want to bring up. Or in 10 or 20 years from now, there's a very likely chance that the existing bakers, all the TZ1 address that we have, people will have migrated to new addresses, or so then you'll have different sets of addresses that will be happening in the future. So that's the other thing that we might be seeing. So again, the integrity of this current history that we have for Tezos, recording it in another form, securing it, well, it's a freebie to have by recording it in Bitcoin's blockchain.
Yeah, so it's sort of a reference point to go back to if you ever ran into one of these doomsday scenarios where something really stuck out to you, like for proof of stake, for instance, in Tezos, everyone's used to seeing Hayek Lab's signature on blocks, every single day because they're such a good baker. They constantly are baking blocks. Uh, but now that doesn't happen since the chain has been
Yeah.
hijacked and reset with totally fraudulent baker IDs. And as you said, with proof of work, the same can be by reducing the number of zeros on the hash, right? So it's going to be obvious that the chain has been corrupted and lost its integrity. And so you have to go back to that starting point, back to that reference point. And that's what you're talking about here by recording the hash on a separate blockchain.
Yes. So it's just, yeah. Correct. So you have to think as an insurer and probabilities and those things. And, if as an insurer, you came up to me, I want to insure my Tezos, or I want to insure my blockchain. Let's say that Tezos was private, for example, and you want to go to an insurer. I want to secure this. The more protection that you had, the lower your insurance will be, because then there's much more additional method of protecting it, and it's just simple as that.
Yeah, and as you compared this to an insurance policy or an insurance agency, thinking of all the negative aspects that can happen and putting measures in place
Correct.
to prevent against
And
those.
the website tezosbtc.com will be publishing basically the information, and I should have posted that. Maybe you'll have a screenshot of that. The point is, once the first block of cycle 100, after a delay of 5 cycles, to make sure there's no forks or anything like that, it's being stable enough. That 5 cycle figure is actually a suggestion from Arthur. And then from there, I'll record it in Bitcoin blockchain through a transaction, and then wait for about a month, because every 10 cycles is roughly 30 days, roughly. And then rinse and repeat with cycle 110 and run 120 and so on. And so that this way we'll have the benefit. So slide 7 mention overall the benefits. So recording the Tezos Hash in different ways, like the Bitcoin blockchain or a newspaper, DNS domain name record is actually another suggestion from Arthur, and I'll take a look at it. But there's additional information you can record when you record your DNS domain name, and so that too is something that could be used, or any other method. So then you're increasing your securing the integrity of the past blockchain, and further back in time, you've got everything covered. It covers the post those very crazy, rare event like a Mad Max or EMP attack, so that kind of thing where recovering information will be any kind of additional source to validate where we were at, it's that kind of thing. And so to come back to this, slide 8, I have I was a little bit surprised of the criticism that I received with this. But there were two, and there's somewhat some value to bring up points. So one of them is like trust you, and why would they trust us to record the information? Well, actually, that's a good question, and nobody should trust anybody. I mean, I think it's valid that people validate that every time we record information in the blockchain, Bitcoin blockchain, it's actually accurate, and I didn't make any mistakes, and that the information is valid and accurate. So as long as we keep going like that, and as further we go, everybody's looking at this, and anybody will be poking and verifying and confirming or reporting if I made a mistake.
So that's actually that's a good point to bring up. So who is double checking, and how is it double checked that the correct Tezos hash gets added to the Bitcoin blockchain?
Yeah.
It could be an honest mistake, or it could be a malicious mistake. So how does that verification process work?
So we have the links, and obviously what happens is that the information published is the transaction ID on Bitcoin's blockchain, which then you see the up return and the exact information recorded, XTZ, block number, and then the block hash. So then we'll look at the block number in Bitcoin's, in Tezos, validating that the block hash of the Tezos block in question, block number 10,000 something, shows up as, oh yes, that's the block hash that we have on Tezos for that block number XYZ. So therefore, the information is accurate. So as simple as that, and it should be done. Yeah, I mean, I would appreciate everybody was be not only recording this, but verifying that where the information is accurate, and report it if it was not. And so that itself, this step will provide that. Now the the other thing that I got was like, it implies that wrongly the proof of stake is not secure and that requires proof of work for security. I don't think it implies that. And I mentioned, I'm not sure if I mentioned that. It's what's funny is that Ethereum Classic, for example, and other low hash power proof of coins would benefit more of this feature than Tezos. So it's a little bit ironic in some way when you look at that, because what happened is, I think a few months ago, there was a 51% attack because as we talked about, it's very easy for someone to come up and to orient for those very low hash power coins, altcoins, to redirect a big huge chunk of ASIC powers towards those coins that you don't like. You don't have to invest in those, and then you can attack those. And so if, for example, part of their official protocol says, well, you know what, every day we'll record the Ethereum Classic into Bitcoin's blockchain, for example, then nobody would be able to, and then there'll be a 1 day that kind of thing, long enough you basically to confirm that you would have Ethereum Classic benefiting from Bitcoin's proof of work by doing something like that. So again, to the point of the insurance company earlier, just this gives just the Tezos an additional form of security. It doesn't mean anything other than that. It's just adding a little bit more to cover all those very weird cases, and some we might not even have thought about. So that's the thing. You just want to give a little bit more security to the network overall. So it's just simple.
Yeah, that's a great point. Just to reiterate that, so this does not mean that proof of stake is not secure. This is just adding an additional measure of insurance to ensure that security. It's not necessary. It's just adding that additional fallback feature. So
correct. Yeah, and without having the requirements or the impact of a proof of work inside of Tezos, we're just benefiting. Oh, it's there. We're going to use it. On newspaper there, we're going to use them too. That kind of thing. Yeah.
Exactly.
Now, I want to finish our talk with something a little bit more interesting, is in terms of the price action. So I shared with you the slide 9, the charts of Tezos from on the blockchain, in CoinMarketCap overall, and it shows the price action before, when it was futures account that was involved prior to July of last year. So at that time, just before the release, that was the high of Bitcoin was in Bitcoin of Tezos was 75,000 satoshis per Tezos. That was really the highest at that time. Tezos was Bitcoin was around $9,000, and so that means $5 about for Tezos. So when we look at today, the major exchange and have been having them since we've been off of since the blockchain has been operating. But it might be an indicative of what kind of next resistance we might have, may or may not. Might be those figures that we had before. But just to give you a perspective, if Tezos was at 75,000 satoshis rather than 20,000 roughly right now, 22,000, then the price of Tezos today will be, do we have it somewhere? Yeah, will be roughly around, the equivalent of $5 close by. And when Bitcoin goes to $100,000 per Bitcoin, now, with the current price of Tezos in Bitcoin, then Tezos will be at $20, but it'll be $75. So we could see at the next bull run of Bitcoin, which might bring Bitcoin towards 100,000. Then we could imagine Tezos around $75. And I was just having fun with those, trying to figure out what it would mean. And it's interesting to see how the big upside could it be there.
Yeah, this is definitely all within reason. You're just
Correct.
comparing basically previous highs in Satoshi, what the price of Bitcoin was back then, gives you the price of what Tezos was back then. And now you're speculating if Bitcoin reaches 100,000 per BTC, what would it mean for the price of XTZ in terms of Satoshi related to USD price? So you go with the current Satoshi price of 20,000 Satoshis. If Bitcoin was 100,000, XTZ would be $20 roughly. If the Satoshi number was closer to the 75,000 Satoshis in comparison from XTZ to BTC, which it was at its peak back in June of 2018, it would be at a price of Bitcoin 100,000 would be XTZ at a price of 75 USD. So this is all within reason, expecting XTZ price to raise to previous all-time highs in terms of Satoshi. What would we see? What would we speculate would be the price in US dollar? So that's definitely the exciting portion of the talk here. I love the speculative aspect of it, where we can all imagine what it would be when the price is raised this high, and also imagine how much more attention will be put on the security of the network when the value of the chain rises to those levels. So that's why a feature like you're addressing here, this additional security feature, is going to matter in the long run.
The interesting part to I want to bring up is the aspect of the proof of stake, the benefit of proof of stake, and to have the passive income will get more dominant in people's perspective. I think the next phase will people realize the clear advantage, and that also the mechanism in which Tezos bring this up with the liquid proof of stake that Tezos has with the delegations. And so that really was going to be making things even more interesting, I think, in the next phase. And I want to bring up a point like Bitcoin has been using proof of work, and it's a little bit simpler. So it's normal that it was the first type to show up in the beginning. But imagine if it was actually proof of stake, that was Bitcoin was proof of stake. Imagine once Bitcoin was launched in the beginning, that it was a proof of stake coin. So people could just come up, invest in Bitcoin, and they will be getting additional, all those rewards that we've seen with the Bitcoin miners and all that. Actually, you would be getting those, those extra Bitcoin. It'll be the perspective today of how things are in terms of the benefits of Bitcoin, of Tezos, proof of stake, will be more positive today. I think in the beginning, people were saying, I'm sorry. Sorry.
Yeah.
People were saying that the benefits of Bitcoin, I'm sorry, I lost that train of thought. The benefits of proof of stake, in the beginning, people were saying, oh, this extra Tez is actually to make sure you delegate so that you're not penalized by the inflation of Tezos. And they're looking at it from a negative perspective. But in reality, nobody thinks about this way for Bitcoin, for example. So I think that'll be dominant more in the future. The interest in terms of proof of stake will be just improving over time.
Right, because with Bitcoin's proof of work, there have been additional coins added to the total supply throughout its history from mining rewards, which could be seen as a rate of inflation. But the price of a 1 BTC continues to rise, so it doesn't really negatively affect your position if you're not participating in the mining reward mechanism. Which I guess the same could be said for proof of stake, as long as that the single value of the XTZ keeps rising above what the initial cost was, then you're not truly losing out. I mean, you are in terms of XTZ, you'd be missing on potential return from their inflation process, from the inflation getting added by the proof of stake process. But your actual value in USD could theoretically keep increasing, and you wouldn't be
and Bitcoin will
losing
be
USD.
mined in the year 2140. So I think I can say safely that nobody here will be around there, unless there's some magic health issue, amazing discoveries later on. The point is that we're far off from Bitcoin having zero inflation. And so the argument about it's inflationary and negative, and it does not exist right now. For Bitcoin, we're not looking at it the negative way. And in some way, gold is the same thing. I mean, gold has been dug out of the ground at 2 or 3% inflation rate for thousands for quite a while. I'm not sure the figures how they varied, but obviously during the Spanish discoveries of the Americas, it's boom up in terms of rate. Overall, nobody saw that as a negative. They're just looking at it as it's not really inflation per se, because in reality, for the dollar, it's way more. We're talking about more than 5 or 6%.
And it also brings up an interesting argument in terms of proof of work, where once you lose that inflationary reward aspect, what motivates people to keep mining and verifying transactions? Is it going to be an increased set of fees that are used as reward, and that creates the sustainability without new block reward generation?
Yes, it is.
That's a whole nother subject.
It's funny to mention that, because I saw a paper in discussion or something. I think it was Arthur who brought this up. It's like, what exactly, and I think there's a lot of debate about this, what will happen on year 2140, basically, when it's strictly through Bitcoin transactions that will be, the miners will be getting rewards. And therefore, obviously, it all depends on what the price of Bitcoin back then, and how many people will be trying to avoid as much as possible transaction, and how much will they cost overall. Obviously, it'll be quite a different dynamic. And so I'm not able to answer that, but it's going to be interesting there for our great grandchildren.
Well, proof of stake won't have that problem, as there will always be the inflationary reward for staking.
Correct. And but just a point also, as it is, it's 512 Tez and it's fixed. So right now, because of the current supply, it means 5.5% inflation rate, but that is actually going down every year. But eventually, the more Tez in existence, the 512 Tez per bake blocks means that they're less impacting on the overall supply. So eventually, in a year 20 and 10 years from now, Tezos inflation rate will be down to 3% or something like that, and it'll keep going down like that.
And of course, that's assuming that no one proposes a change in that fixed reward rate in the meantime, with the on-chain governance of Tezos. So a lot of variables at play here. Very exciting stuff. Obviously, Tezos is on the cutting edge of technology in terms of blockchain and proof of stake. And I love what you're introducing here with the concept of adding the Tezos hash onto Bitcoin's proof of work blocks algorithm consensus. So again, this is Phil Champagne of Hayek Lab. Thank you again, Phil, for joining us. Guys, make sure to check out his book of Satoshi. And then also, Phil is writing a book on Tezos. It's sort of another decentralized version, if you want to go ahead and give a plug for that as well.
Yes, I've been pausing on this because we had some other work, but I'm going to be resuming my my work on that and trying to, I'd like to release that in this year.
Really looking forward to it, Phil. So in closing, anything else?
Well, thank you so much for having me, and I'm looking forward to our next chat.
Absolutely, Phil. Until then, take care.
Take care.